When you're thinking about investment, the e-commerce business is one of the most and steady growing worldwide. We know Amazon, we know a lot of things that happen online meanwhile. And also I had to see some numbers and I am telling you this is ridiculous. We're having around 18% growth this year for e-commerce business, and also if you consider Western Asia, there's a big difference. For example, the Asia market is doing e-commerce rather than the usual retail by 85%, and the Western countries only 17%. So I'm looking into the top 3 stocks for e-commerce, so make sure you stay tuned. So welcome to another vlog here on Wolf of Dubai, and before diving into the first stock, which is eBay, I want to make sure that you subscribe and hit the bell notification to be notified immediately when I'm vlogging every day and releasing this vlog on YouTube, so you get notified and can see the content immediately. So thank you very much for watching. And I want to dive in the first category, which is eBay. So eBay is one of the first categories because eBay is the e-commerce veteran. Started with, you know, auctions that you can put something online and it get into an auction and then you sell it, and it's like a consumer to consumer based platform. It changed a lot, you know. They bought PayPal once, they separate from PayPal, you know, they go into the e-commerce side. B2C business as well is very growing, and they are one of the first company ever in the e-commerce platform. So let's dive into the numbers. So first of all, they are established 1995, so almost 24 years ago, and this is ridiculous. You know, they had a really good year so far. Year to date growth was 40%, which is very good, even more outperformer this year throughout the market. They are a market cap of $33.8 billion and have a PE ratio of attractive 15%. If you consider this into different, you know, tech companies, this is quite cheap. PS ratio 3.5 is also very acceptable and attractive. And if you're looking into the revenue numbers, they grow single digits, you know, over the years. You know, a little bit less last quarter, just 1.78%, but the year before was 4%, and the year before even 8%. So a good, you know, stable investment. eBay up to date. Let's dive into the next one, which comes from China. So Alibaba is one of the biggest giants in the e-commerce business, founded 1999 by Jack Ma, who just recently stepped down as CEO first, and just recently as chairman as well. And you know, he always have lot of wisdom to share, so I just recommend to look into my latest vlog where he discussed AI with Elon Musk. It's very interesting. But also, you know, he is saying that I rather die on the beach than in the office, which I share. So you should share this opinion as well. Don't work too much and don't overwork yourself. Make sure to subscribe as well, so you get notified whenever I vlog, to make you the better investor, so you don't have to work 9 to 5. However, so let's dive into the stock itself. So market cap is $472 billion, so much bigger, or more than 10 times bigger than eBay. PE is quite high, it's like 33.75, and PS is over 10, which is one of the biggest I have seen so far. If I'm looking for value investments or growth investments, this is quite big. On the revenue though, let me tell you, this company grows like crazy. Okay, so let me give you some numbers. So 2019 they made the annual revenue of $56 billion, which was an increase of 40%. The year before they grow 73%, and they grow 2017 46%. So from 2017 until 2019 they more than doubled their revenue, which is ridiculous, and this is just increasing. Just last quarter, year over year, they grow 36.9%. So you see where it is going. This company will, double, and that's why, the PE and the PS ratio is so high already, because the people are anticipating more and more growth. What else is to say about Alibaba? They actually following a different approach than, for example, Amazon. They are more focused on the sellers, so they just creating the platform but not owning, delivery vans, warehouses, and so on. So really they put the seller inside the spotlight, and also, they grow very, very big, because there was a lot producers in China which searched for their clients overseas, and there was no platform, and Alibaba invented this with the internet upcoming and available on almost all China. This platform grow obviously with the biggest population in the world. Very easy business model if you ask me. So definitely is something that is considering to investing if you're looking for a good growth company. So let's go into the next one, which is Amazon. So Amazon is one company that made already the jump over the $1 trillion company, but now at this point, they had a nice growth of 18% this year to date, and they have a current market cap of $885 billion, and the PE ratio, hold your seat, of almost 75. So you see the company, the shareholder of the company actually price in already lot of growth, lot of future inside the stock. And this is very good for Amazon. And people saying since decades Amazon is overvalued, and the stock just keep on growing, and also new divisions, new business models, and so on. So whatever market they go in, they are crashing. All right, so let's dive into some revenues, because this is crazy as well. This company grows steadily over the last 3 years, 30%. So in 2016 they made a revenue of $135 billion, which was already in 2018 $232 billion. And also if you're looking into the current quarter, they made $63 billion, which was a 19% increase, guys, of the year before quarter. And this numbers at this scale is absolutely insane. So if you're looking for a growth company, I really recommend that as well. And make sure that to understand Amazon, because Amazon is approaching it differently. They see, for example, that it was necessary to provide the best. They are very, very much consumer orientated. So they are really trying to deliver the best experience to the consumer, which involves fast delivery or first same day delivery, which involves warehousing facilities and so on. So they're investing in this. They are also dreaming about flying warehouses with delivery drones. They just announced a huge order from Rivian, the e-car manufacturer, that will create delivery vans. Actually, it's something that they put from their pocket to their own pocket, because Amazon is invested in Rivian, and obviously when they place such a big order, Rivian will go in value. So in the end, Amazon will profit from that as well. So let's jump into final conclusion. Okay, this makes me really hard to decide if Alibaba is the better investment or Amazon. Alibaba, huge growth, will definitely grow further And Amazon, you know, it's just like this multi-diversified company that never stops growing, very focused on a consumer, which I really like, and also very effective company. I read the book about Jeff Bezos, definitely a recommendation for you guys. How really it looks inside Amazon, it's just ridiculous how this company maintain their culture to be super efficient, to spend every single dollar into consumer experience, and that's why I love the company. And also with new business units coming up, you know, they see like they spend a lot of money into data centers, into traffic and the infrastructure of providing the biggest marketplace in the world, and that's why they started with Amazon Web Services, which is one of the biggest cloud service providers meanwhile, and making billions of dollars. So that's why I'm choosing Amazon in this conclusion in this video. Let me know what you guys would choose, or if you have different stocks, I would like to know in the comments. See you tomorrow. Bye.